Now we will be doing a practice question in which we learn that how an impaired asset is depreciated in its subsequent year, means subsequent to the impairment loss. Okay, so your concentrations would be required in this practice question. The question is that we had an asset on 1st of January 20x1, okay, and that asset was purchased for 240,000 on 1st January 20x1. Its estimated useful life was 20 years and there was no residual value associated to that asset. Depreciation was charged on straight line basis. Okay, so pretty much easy scenario. You can orally calculate that how much would be its depreciation by dividing it at 240 to 20 years because there is nil residual value. Okay, you are smart guys. Well, now on 1st January 20x4 means traveling down after 3 years. On 1st January 20x4 means at the start of the 4th year. An impairment review showed the machine's recoverable amount should be 100,000 and its remaining useful life has been revised, and that is 10 years now. Okay. Having said that, the first step in this type of scenario is that till 31st December 20x3 means for 3 years, we have to work out its accumulated depreciation. As I told you over there that you can work it out orally by dividing it to 20, you will get 12,000 as its depreciation charge for 1 year. And that 12,000 times 3 will produce 36,000 as accumulated depreciation on 31st December 20x3, okay, which will be leaving this 204,000 as carrying amount or net book value, which will obviously be carried forward, and you will see this is the amount which is on 1st January 20x4 as a brought forward balance. Okay, so this is step 1. After understanding this step 1, in which we worked out previous 3 years accumulated depreciation, now comes the accounting for impairment. What happened on 1st January 20x4? The asset was tested for its impairment to assess its recoverable amount. There was some indicators based on which we worked out its recoverable amount and found that its recoverable amount is lesser than its carrying amount. Its carrying amount is 204,000 on 1st of January 20x4, whereas its recoverable amount provided in the scenario is 100,000. Okay, remember the date is very important, which is 1st January 20x4. So on this 1st January 20x4, we have sustained a loss of 104,000, which is to be charged to profit or loss account as an impairment loss. Okay, ये accounting हमें clear है. Well, तो यहाँ पर अब जो अगला पॉइंट समझने का है वो क्या है कि 31st दिसंबर, मैंने आपसे कहा था डेट्स बहुत इंपॉर्टेंट हैं सारे स्नैप. अब ये 4th ईयर एंड हो गया. वी आर एट 31st of December 20x4, एंड ऑफ द 4th ईयर. इस साल के एंड पर अब हमें डेप्रिसिएट करना है इस एसेट को. How much was the amount at the beginning of the year appearing in the balance sheet or in the asset account on that date? That was adjusted to 100,000, remember. तो वो 100,000 आपका जो एसेट की वैल्यू थी साल के शुरू में, अब वो अगले 10 साल में डेप्रिसिएट होने जा रहा है क्योंकि यूजफुल लाइफ चेंज हो गई. अब आप उस 100,000 को 10 years पे डिवाइड करेंगे. ये 10 years पे डिवाइड हुआ leaving a depreciation charge of 10,000 for this year 20x4. Got the point? So this is how an asset which has been impaired will be subsequently depreciated. अब इसकी depreciation की accounting entry, depreciation expense debit and accumulated depreciation credit, this all you know very well. मैंने इस सिनेरियो में जो फोकस किया आपको सिखाने पर वो क्या है कि एक impaired asset को subsequently आपने किस तरह depreciate करना है. And I trust you have learned it very well. Thank you.